with the management who's joining us on the show. Mr. Rajan Sethuraman, the CEO of Latent View, is with us. Rajan, hi, thank you so much for making time and speaking with us. Well, over the last few quarters, we had seen a normal upward trajectory, but this time around, sequentially, there's a decline of 3% on revenue. The margins have slipped substantially. What went wrong, and is this an aberration? Should we expect recovery to come back in FY24?
Right. Firstly, thanks for having us on the show. Quarter four has traditionally been a slower quarter for us, right? Even in the last several years. That's normally on account of the fact that quarter three is when clients go all out to exhaust their budgets, and our quarter four coincides with the quarter one of many of our clients in the US. And even where initiatives have been signed up, they are off to a slower start with actually commencing work towards the end of January or early February. So this year, on top of that, we have seen a couple of other factors play out. One of them is that in many instances where we're doing fixed scope work, we typically have follow-on work that we identify. In this year, while follow-on work has been identified, clients have been reluctant and slower to sign up for that. And secondly, there are also many larger opportunities that we are pursuing, and all of them are seeing a certain amount of uncertainty and sluggishness in just signing up for bigger, larger work. So all of that has meant that our quarter four has been a little slower than even what we normally witness. However, we have been keeping our foot on the pedal in terms of the investments that we've been making at the front end. This is additions that we're making to the sales and business development teams in the US and in Europe, and also in terms of capability development, asset accelerators, and value propositions back in India. So the combination of that has really impacted the margins as well. We believe that while the market uncertainty and sluggishness could play out over the next 1-2 quarters, we don't want to take the foot off the pedal in terms of some of the investments that we are making. And we believe that they will stand us in good stead when the demand bounce back occurs, hopefully in the second half of the year. So we could see margin pressures for the next 2 quarters as well, but we're expecting to come back strong from quarter three onwards.
Right. Rajan, we did see that, if you just take your quarter gone by on the side for a moment, that the full year actually clocked out to be one of the record years for you. If you were to just, for a moment smoothen out the volatility of quarterly movements, because, which quarter has what deals and all of that, the direction the company is taking, the strategic direction, what kind of conversations are you talking about? You had indicated in your first answer that you're working on certain very large projects.
Absolutely, and we don't see any kind of slowdown, right, in terms of the medium-term trajectory. In fact, we have fairly ambitious aspirations of going from where to about 3 times our size and revenue through both organic and inorganic channels in the next 3 years. That is the intent with which the entire leadership team and the management team is working. I have highlighted the areas of focus in the past, sectors like BFSI and retail, Europe as a geography, for example, supply chain and data engineering. These are the kind of sectors that we are focusing on. And we also believe that there is going to be a fairly significant amount of demand and momentum on the back of new technologies like GPT-4, right, and ChatGPT that everybody is talking about. We are actually doing a lot of exploratory work in that space on how we can embed generative AI technologies and capabilities into the value propositions that we are building. So once the current uncertainty is shaken off, I think the demand will come back very strong. During the pandemic, everybody took, including us, we were a little conservative and we said, let's push out cash and not make the investments up front and ahead of the curve. We are not doing that mistake this time. So while we are evaluating and making sure that all the expenditure that we are incurring, whether it is marketing or assets, is all the right ones, we are not slackening at this point in time. We believe that once the uncertainty is resolved, there'll be very strong demand for data analytics services.
Right. Rajan, just wanted to come back to your first question. You said the next couple of quarters are going to be a bit lower with respect to margin and revenue growth. Given the fact that from the 30% margin profile, you're already down to 21%, is there more downside to it? And secondly, what kind of revenue growth should we pencil in for FY24, given in FY23, you clocked a growth of 32%?
Right. No, we're not expecting any further downside pressures on the margin. We have kind of made the investments. Our significant investments are really on the personnel front, right? Whether we're talking about sales and business development or capability building. So all of that is more or less done, barring for 2 or 3 roles, right? And they will be churned and we'll be backfilling for them. But all of that the expenditure, right, on the front end and stuff is all done. So I'm not expecting any further margin pressures on account of that. We will calibrate any additions that we make to the delivery team here on based on how the demand trajectory picks up, right? What gives me a lot of confidence at this time is that sitting in early May, we have already renewed the entire book of work that we did for last year. And we have extensions, high probability extensions in place as well. So if I just total it all up, that is already more than the revenue that we did last year. So we are already on the growth track. And I now have almost a $50 million pipeline, right, that with opportunities at various stages of conversion. So what I don't know is how quickly all of those opportunities will convert and how they will fall in place. Some of them will, of course, lose because of competitive pressures. But from here on, it is really upside that we are looking at. We will continue to add to the pipeline as well. Just to give you some indication, when we started last year, we were probably having less than half the number of people that we today have at the front end, right, from a sales and business development perspective. So all of that is expected to contribute to further additions to the pipeline as well as conversion, right, as the market momentum picks up.
Point taken. We let you go on that note. Appreciate you joining us on ET Now.